everybody, and thank you for joining us. This is the Red Lake Gold District discussion panel. We have a phenomenal lineup of CEOs here for you today to, of course, discuss Red Lake Gold District, as well as their companies and the assets, which all of which are in the Red Lake Gold District. Short disclaimer here. Okay, so a panel of CEOs consists of Chris Taylor of Great Bear Resources, Dan Wilton of First Mining Gold, and George Ogilvie of Rubicon Minerals. And I am your moderator. My name is Justin Hayek. I'm an investment advisor here in Vancouver with PI Financial. So before we get into the questions and discussions portion of the discussion panel, I have a brief video I want to show you. It's from Proactive Investors, which really gives you, I think, a good sense of the history for the Red Lake Gold District, as well as just gives you a sense for how prolific the district actually is. So if we could play that would be great.
It has a very rich history in mining dating back to 1925 when gold was first discovered. In fact, in the summer of 25, two brothers, Lauren and Ray Howie, discovered gold under the roots of an upturned tree. This event triggered the last great gold rush in North America, the birth of commercial bush flying in Canada, and the founding of the town of Red Lake. In fact, so many people converged on the town, coming by foot, dog sled, and even by boat, the population swelled to 3,000. Eventually, bush flying became the norm, and in 1936, the airport at Howie Bay was the busiest airport in the world. Red Lake really stepped forward in 1989 when Rob McEwen and Gold Corp showed up, and the rest, as they say, is history.
So, first question to all three of you. Why Red Lake over every other mining district? George, you want to handle that one first?
Yeah, sure. Thank you. Well, obviously, you know, Red Lake has been around for over 80 years. I think we can say it's a Tier 1 jurisdiction, so very safe as far as geopolitically, socioeconomically is concerned. There's been over 28 million ounces of gold that has come out of that camp over the last 80 years. And of course, Rubicon controls 28,000 hectares of prime real estate in Red Lake. So we think it's a great jurisdiction, and there's a lot of exploration opportunity within that camp. Yeah.
Go ahead, Dan. Sure.
Well, I'll start off by saying that we're a little bit Red Lake adjacent, not hardcore Red Lake like these two. Our projects are kind of in concentric circles, 100 to 150 kilometers outside of the core Red Lake district, both our Goldland and our Springpole project. But I think there's a lot that I would say echoes exactly what these guys are going to say. We can't talk about the specific geology, but as an environment for mining, as a supportive community, as a great sort of set of skills bases, and as a really proactive place, it's a great place to be developing projects for sure.
Yeah, I think I could start off from the general sense and say that basically, in Great Bear's point, we got sick of spending money on jet fuel. So Red Lake is one of these areas you go into, and the drill costs are very much lower than other jurisdictions, and the discovery potential is very high. I mean, if you wanted to go find diamonds in Canada, you'd probably go up to Lac de Gras. If you want to find high-grade gold, you probably want to go into a district like Red Lake. And I think the success that we've had shows that exploration is very much on the menu for this district for many years to come. So I think even though it's produced 30 million ounces already, the total mineral endowment of the area has yet to be recognized.
Okay. So let's talk about discoveries. Late 2018, Great Bear made a pretty significant discovery at Dixie Project. So my understanding of the Dixie Project, it doesn't fall under the typical Red Lake model, if you will. So maybe, Chris, could you explain in layman's terms what that model is, and then how the Dixie Project differs from that?
Okay, well, a little bit of geology. As a geologist, I love talking about geology, but I realize eyes tend to glaze over very rapidly when we all get into those topics. So generally, Red Lake, most of the mining's in one set of rocks, these mafic and ultramafic type rocks, a lot of it in the Balmer sequence, as it's called. These are high-grade gold in veins, right? So excellent grades. They go down for miles in many cases. You just have to go to the bottom of the elevator shafts in the Red Lake mine and enjoy the journey, because it's a long one. So if you like high-grade gold in veins, it's definitely a good area to go through. What we found on our project is, yes, we found that type of mineralization. It's what was known about when we made the initial discoveries and when we acquired the project. But some of the success that we've been having recently is in rocks that were largely dismissed as having potential for significant mineral deposits. These are felsic units of geology, and they don't have really the same vein type mineralization. It's more like disseminated high-grade gold that you see over many kilometers. And it has a level of consistency and a difference in the fact that it's not confined to these narrow veins. It's in wide zones of disseminated gold, which are completely different from the majority of the deposits in the district.
Okay. So I'm just going to reference this slide here. So what this shows or represents is, I believe all of your projects are covered here, and it shows how far exactly from the core, the center of the district, again, various projects are. In November 2019, it was announced that Evolution Mining acquired the Red Lake Gold Complex from Newmont Gold Corp for total consideration of $475 million. What does having a new neighbor in Evolution Mining mean for the dynamics in Red Lake?
Well, I'll jump into that one. I think one of the most important things to take away from that is exactly what's on that chart, because the chart that you're showing there, I think, came out of the Evolution investor deck as to why they're so excited about Red Lake. And it's that not just, it's a great historical mining camp. You've got the existing mines. You've got great exploration potential. You've got great near mine development potential and some infrastructure that could be rationalized. But you look further beyond that, and you have, potential there for 1 million ounces of annual production when you look at all of the mines that are on that page. So, without going too far, if you're a company with a great operating history coming from another country, and you want to stay reasonably close to home, I think this is one of few places in Canada. I mean, you could probably draw a similar map around Val-d'Or, a similar map around Timmins, but there's not that many of these places where you have real, district scale company making 1 million ounce plus potential in one geographic area.
George, you want to add anything to that?
I think when Evolution was speaking about the deal, they spoke about actually using Red Lake as a beachhead. And that would seem to signify perhaps that, once they've got their arms around the new assets that they are about to acquire, they've got them up and running the way they would like, then potentially they will look at further M&A. And I think Dan's quite right. Why wouldn't you look concentrically out from your core operations that you have in North America?
Chris?
Well, I'd say they've also made a good decision in picking this district. If you're looking at Canada, it's generally a safe jurisdiction to go and make investments in. But areas like Red Lake benefit as well from having a settled land claim process with the Indigenous, the First Nations groups that are in the area. So you have an orderly group of people that you can deal with to set agreements and other sort of long-term benefit structures. And that's a real advantage. Although Canada is a great jurisdiction to work in, Red Lake is exceptionally good in that department.
Okay. So if you had to bet on it then, what would be the next asset in the district to be acquired? Don't be too biased.
It's like a race for us all to put our hands up, but next one to be acquired, I guess the real question is by whom? I don't know that there's one answer to that. I mean, you look at a new, very exciting, high-growth resource potential here. You look at amazing infrastructure spend, a mill, and probably one of the greatest land packages, in the world for exploration potential that George has. And you have, in excess of 7 million ounces of defined resource that we have in First Mining. I mean, listen, I think maybe the answer is we should all just combine and we'd have a world-class gold company.
Yeah, it's. I know there's no wrong answer for this one, Justin. So when I think about it, though, looking at this area, it's really remarkable. And Bob Singh and our VP Exploration were chewing the fat the other day we commented that with Newmont's departure, it's really the greenstone belt here. It doesn't really have a major owning a part of it now. And if you think about it that way, that's not going to last forever. Right? So Evolution is a big company, it's a growing company, but it's not in the same category as a Newmont or a Barrick or somebody like this. So how many big greenstone belt areas, districts do you know of with this many mines and this sort of potential that are not controlled by a major mining company? I'd say the answer to that is probably zero with these sort of infrastructure and location advantages. So I think that's something that's very likely to correct itself over the near future.
Yeah, I would agree with the sentiment of both Dan and Chris. I mean, obviously, I'm slightly biased in sitting here with a market cap of a company that's under $100 million, and essentially, the mine has been built. We've got a fantastic land package, and we've got almost $700 million in tax loss pools, which, when the Red Lake assets were sold by Newmont Gold Corp, Newmont Gold Corp actually retained the tax loss pools for their other operations in Canada. And Evolution coming in as an Australian company, obviously they're not bringing any tax loss pools to the table. So I think that means over time that Rubicon's tax loss pools are probably going to be hugely advantageous to any groups within the camps that have profitable mines that are free cash flowing.
Now, under your stewardship, how have each one of your companies been using the capital most effectively to deliver shareholder value?
Well, I'll jump in there first. Obviously, Rubicon, it's really all about de-risking the project from a technical perspective, given what happened with the old Rubicon 1.0 some 5 years ago. So over the last 3 years during my tenure, we've actually put out 3 43-101 compliant resource statements that have been put out using Golder and Associates and Tim Manula and Associates. We came up with a new geological structural model about 2 years ago. We believe we validated that model a year and a half ago when we put 40,000 tons of ore through the mill, and we ended up with a 14% positive reconciliation over and above what the model predicted. We just put out a PEA last year with strong positive economics of a plus 40% IRR. After tax NPV of 135 million and almost 200 million in free cash flow. And of course, we've announced to the market now that we're undertaking a feasibility study that'll be out in the second half of the year. And of course, within that feasibility study, we'll have reserves, which the old Rubicon never had. And of course, they never even did a feasibility study. So we will only move this project forward with a project financing, on the back of robust economics and a feasibility study with reserves.
Well, we're similarly moving forward on de-risking. I mean, we have a huge established mineral resource base in a couple of our projects, and the ones we're focused on are in and around Red Lake. But Springpole, which is a 5 million ounce project, this is one of very few gold projects in Canada capable of producing 400,000 ounces a year. This is big enough for the largest mining companies in the world. So we're de-risking that through, we put out a PEA last year that had net present value of about 850 million US, but we're now taking that project through pre-feasibility study, and it's in the permitting process. So part of the development plan of Springpole is building a couple of cofferdams and dewatering a bay of a lake, which is a perception issue that the project's faced forever. But it's something that when you actually look at the data and understand it, it's a very straightforward path to move forward. So we think that every step we take on permitting that project and getting ultimately a step closer to its environmental assessments, we think is going to surface an enormous amount of value. And then on top of that, we're drilling at our Goldlund project, which is already sitting 1.7 million ounces, about 800,000 indicated, 850,000 inferred, at very attractive grades, open pittable, just off the highway between Dryden and Sioux Lookout. So we've been drilling there and put out results, not quite as good as Chris's, because that's pretty amazing. But we've been putting out results last year, like 150 meters of 1.5 grams from surface and 40 meters of 4 grams in an open pit. Like, these are some of the best open pit drill results in Canada that are totally lost inside our portfolio. So that's really, for us, moving forward this year, there's a bit of the spend on those. But it's also shining light on the balance of this portfolio that we have with a couple other projects in the neighborhood. Pickle Lake, Pickle Lake is Red Lake, except Red Lake's produced 30 million ounces and Pickle Lake's produced 3, but high-grade gold camp. And some of our other projects in the area, I think people are waking up to the fact that these are really interesting resources. So that's how we're moving forward, de-risking and shining some light on the rest of the value that we have.
Thanks, Dan. My grandfather actually worked underground at Pickle Lake.
Is that right?
Back in the day, so he had some great stories about buying ice cream and other things that I couldn't discuss in front of a large group of people here. But all things aside, we're at really an earlier stage in the development exploration curve than the guys that are beside us, and we've been very successful. But it's very early days with Great Bear. So if you look at the sequence of discoveries, there's been new discoveries and new zones across the project virtually every couple of months for the last couple of years. It's getting to the point where we now need to do more advanced work on some of the zones that we found, because we want to show people how big it is and how continuous the gold is and what that could mean for the valuation of the company. So it's really still a rapid growth phase with us, where we are de-risking by doing dense drilling. And what we're seeing is that advantage of the infrastructure, because all the gold we're finding is within about 1 kilometer to 3 kilometers from the highway. It's cheap to drill it, and that means that the money that we raise is turning into meters drilled, and that's been really cost effective for our shareholders. So we've been really blessed in a way, and I say that we're grateful every day for having delivered such great returns to our shareholders so far, but it really is very early days with the company, and we think, based on what we're finding, there aren't a lot of comparables with this sort of potential size, and none of those comparables are operated by independent junior companies. So our desire here is to get to the size and the recognition of valuation in the market while we still control the project. So I think it's going to be a very busy year for Great Bear, probably our most busy year to date, and you'll see that with the news as it begins to come out on a regular basis here in the near future. So we also have our royalty spin-out we announced, which I know was a very unusual step, but it's another way to make sure that you deliver value to your shareholders instead of the future shareholders off of a company that may or may not take you out and take you over the long term. So based on what we're seeing, we think this is a tier 1 asset that we're drilling off, and I think there's a lot of value that you could derive from that royalty that we've announced. And we'd like to be, as shareholders of Great Bear, we would like to be the ones that benefit from that value. So this is something that all of our shareholders can proceed along with us in management with, and I think it's something that'll be very valuable over the long term as well. Okay. So, thanks.
So considering where we are, I guess, if you will, in what I believe are the early innings or early stages of the bull market for precious metals, and we'll qualify Great Bear as a Explore Co, if you will, and First Mining and Rubicon as developers, why should investors be considering investing in an exploration company versus, say, a developer versus a producer?
Yeah. Okay. I'll start with that one. I think there's a famous curve in the industry called the Lassonde curve. And when you look at this, you get rapid growth in companies as they go through the discovery process. And we've been enjoying that very successfully, I might add. And then typically there's another period of growth when you've gone through the studies and all the painful sort of economic studies and de-risking and everything else. And then you get another sort of honeymoon phase of growth when you're dealing with cash flow in a company. So, we have the advantage of having brand new discoveries. I mean, the LP fault zone that we're finding now, I think we began drilling it only in May of last year. So if you think that's only about 7 months ago now, so it's really been a rapid phase of growth for us. We've still got about 80% of the project to explore. So very much it's the discovery and growth story with Great Bear. And obviously as we cross those development thresholds, we'll be joining these guys over the long term, but we're nowhere near that finishing of the discovery process. It's very much an ongoing thing for us, and I think it's going to be, it'll be a very interesting year to see how things go.
Well, and I think you should enjoy the period of the curve that you are in, because when you get into the part that we're in, it's really hard. It's really hard when you're actually applying science and de-risking projects. But the reason you want to invest in a developer right now is because we are seeing the largest gaps of valuation between developers and producers right now that I think I've seen in my career. I've been doing this for 27 years. So for whatever reason, development capital has been very hard to come by. That's changing. It's changing because free cash flow in the gold industry has doubled with gold above $1,500. And big companies now are starting to think about growth again, where they haven't thought about growth since 2011, 2012. So that just represents a real opportunity to be invested, in a story that's, a portfolio of assets that's trading at $10 an ounce, that's trading at 0.1 times its net asset value. When your producers in your portfolio are trading at 1 or 1.5 times net asset value, it's kind of a good value trade to think about maybe lightening up on your producers and starting to look at the developers, because it's not that the value hasn't been there. It's not that we've been eroding value over time. It's really just kind of a recognition that these projects are going to be moved forward. So I think it's a great time to be buying developers, because this valuation disconnect is as big as it has been in a long time.
Yeah, I would agree with the sentiment that Dan just put forward, that there's huge disparity right now between the valuation of developers and the production guys. And, I think specifically in Rubicon's case, although we are a developer, on the back of a robust feasibility study at the end of this year, we're very confident that we can put the project financing for this project in place. And given that the mine is essentially 95% built, we can actually bring it to commercial production in a relatively short period of time. What's also nice about our respective companies is that while that type of work is going on, we have vast land packages which we can explore upon. So I think there's an opportunity in some circumstances to actually get the best of both worlds, that you can be a developer moving into production, and then if you're exploring on your sort of regional land package and having any success to the tune of Great Bear Resources, that'll add further momentum to the story. And I really think that's where investors should be focusing, particularly on, as we said right at the onset, tier 1 jurisdictions with proven management teams in very, very safe areas of business.
Okay, well, that does conclude our discussion panel. So thank you all for having joined us, and thank you to our panel of CEOs as well. Thank you. Enjoy the rest of the conference.